For a significant part of the previous year, the cryptocurrency market was decimated. Right now, the macroeconomic backdrop of mounting interest rates and multi-decade high inflation further gulp down any hopes for a respite. The upcoming bull run is about to shed light on the road to recovery. And concerning this, let's talk about Bitcoin's super cycle. With the inception of the Grayscale versus SEC lawsuit arguments, the crypto market is now depending on two high-profile cases, the other one being the XRP lawsuit. It has been long argued that XRP case could dictate the fate of the entire crypto market, but it's kind of amusing that both lawsuits are in their final stages. However, in a backdrop of strenuous 2022 for the crypto ecosystem, the Silvergate liquidity came as a major first pullback of 2023. The recent stock market rally was not enough to propel a Bitcoin price recovery, given Silvergate's troubles. In anticipation of a green light, certain outcomes could potentially fuel the onset of the next crypto bull run. The return of a super cycle is one of them. So many models and metrics aim to predict market trends and pricing, using all kinds of major references as a starting point. The Bitcoin halving has always been one of these references, as it's significantly ingrained into the asset's fundamentals. Block rewards are divided by 2, and a steady demand eventually drives the price up. A bull or super cycle does not just jump in, therefore are well-defined prediction models. Some of these models are not strange, perhaps the most famous being the stock of flow model, which offers an average with deviations that are consistent in forecasting market tops or bottoms. Recently, other theories have garnered attention, such as a supercycle that would break this 4-year tendency, leading Bitcoin to no longer repeat bull runs as in 2013 or 2017 with a subsequent crypto winter after a massive pitfall. Instead, Bitcoin would be so established and fortified to stay immune to the boom and bust cycles that imply a 90% plus price movement in a short period of time and a clear distinction between bear and bull markets. On the other hand, this narrative can only be sustained if there is an increase in the number of active wallets or newcomers or fundamental developments, including institutions buying Bitcoin, top-notch investors, or even more countries adopting Bitcoin as legal tender. While price fluctuations can be reduced if there is an increase in Bitcoin's market cap as a result of the strong interplay of these indicators. But looking at the current data, one could question if Bitcoin does follow 4-year cycles, or if 2023 is leading to a distinct paradigm and validating any similarity to cycles with bottoms or peaks that will invariably repeat over time with the same pattern. Some well-known crypto market analysts such as BitBoy Crypto and Benjamin Cowen defended the idea of a change in cycle behavior of Bitcoin, with the consequence of the lengthening of these cycles and diminishing returns. The current cycle, which started after the halving in May of 2020, has had its fair share of uniqueness, so to speak. With a strong start during the last months of 2020 and the start of 2021, many were so bullish. They assumed that the first few months of the bull run were repeating a similar move as in 2017 or even shortening the cycle. However, as experienced afterwards, subsequent corrections due to multiple factors such as outrageous pumps by personalities such as Elon Musk or signs of an overbought market with no major drawbacks for months welcomed important corrections of more than 50% during the summer. When observing previous Bitcoin cycles, it's important to note that neither 2013 nor 2017 was the same, and 2021 went in a completely different direction. The halving has a fundamental impact on Bitcoin, but the general pattern is still vulnerable to many other factors. Global economies, politics, and social situations still played a relevant role. Last year, after a calmer period, Bitcoin managed to seal its highest close in February, shedding off concerns that an imminent bout below $40,000 could enter. Conditions were indeed favorable for a more bullish perspective on shorter time frames, but as usual, nothing was guaranteed. The bulls need to tackle resistance and flip into support, starting with levels north of $42,000, which was a case of so near yet so far for the market. Signs that belief was heating up came from increased activity in the stablecoin markets. Currently, questions are being raised about whether Bitcoin needs to be evaluated within the context of one of its best known traits, the 4-year price cycle. Reiterating what we said earlier, halvings have historically had a predictable impact on the price performance. For example, bull market peaks have occurred the year after a halving, with bearish corrections following before the process slowly repeats. This time has been decisively different, as the end of 2021 failed to see the same blow off the top witnessed in 2013 and 2017. Measuring Bitcoin against its all-time high and its potential to beat it may no longer demonstrate market strength or capability. Many experts believe stuff such as super cycles are over, but not everyone agrees with that thesis. According to a popular Twitter user, Credible Crypto, Don't quite agree. If we get a parabolic blow-off fifth wave, then there is an equally aggressive drop that follows. But generally, yes, we can expect higher lows and higher highs to be put in over time, of course. However, key point to notice is that the Bitcoin price approximately follows a logarithmic growth trend as the curve flattens out over time. This indicates diminishing returns for each cycle. For the upcoming cycle, it remains to be seen whether it will be the same trend. The 2011 cycle had a 3,500x return, 2013 had a 68x return, 2017 had a 105x return, and 2021 had a 20x return. With this pattern, a 4x return for the 2025 cycle will likely be the case. As you can see by the numbers we just pulled out, the decrease is dramatic for each cycle. Diminishing returns give a base forecast of 80,000 for the 2025 cycle peak. If the bottom dips lower, for example, 12K, then a 4x return will give a 48,000 peak. That's a lot less than the 2021 peak. Perhaps a bull run is not worth anticipating at all, as diminishing returns have always been natural in Bitcoin cycles, and this is something that cannot be ruled out when it comes to predicting the price of Bitcoin. From an optimistic mindset, the forecast of 150 to 300K does seem possible. This would still result in diminished returns from the current levels compared to the 2021 cycle. With this analysis, it is safe to guess that Bitcoin will reach anywhere from 50 to 150K in 2025. This could be its top before plunging into a multi-year bear market. Unfortunately, this might not play out as in crypto investors hope. Buyers of today's highly discounted prices might not have the most to gain in the long run. Nonetheless, if there's anything that market swings have taught crypto investors, it's that anything can happen regardless of disturbing conditions. One question that might be asked is, are we bracing for a crypto comeback? You are definitely on the right track because these things might swing in a favorable direction. Super cycles or not, the crypto market is shrouded with immense opportunities. Now, if you're bullish on blockchain-based tokens generally, Bitcoin still remains a viable option. Crypto is already volatile enough, so investors can reduce their volatility exposure by sticking with a token that gives the highest returns. Low-priced cryptos like Cardano are also worth considering. But truly, is a 5-figure token like Bitcoin capable of skyrocketing? Well, I don't think of Bitcoin as a dinosaur among digital assets. If the conditions are perfect, there is probably a miracle. Bitcoin can provide a suitable combination of stability and expansion. Since Bitcoin's inception in 2009, it has crashed several times, and critics have predicted its demise. However, they have been consistently proven wrong after the tokens fully recover. It takes a while for Bitcoin to completely regain its grounds this time, but a full recovery to the previous peak of around $69,000 would represent a 3x move. Whether that's your definition of skyrocketing or not, a 3x move is certainly respectable. Investors should be more concerned about why Bitcoin crashed this time. Concerns about intensified crypto regulation and the legitimacy issues are definitely pieces that help solve the puzzle. But a major contributing factor to the Bitcoin downfall that began in late 2021 was, without a doubt, the market's trepidation for higher for longer interest rates. That fear put negative pressure on risk on assets such as formerly high-flying tech stocks. Right now, one might argue that the Federal Reserve is closer to the end than the beginning of its hiking cycle, but there is no need to go down that particular road. It's just to point out the fact that not every Bitcoin problem can be traced to its tendency to oblige to tragic trends. Bitcoin is too large and influential to ignore. Its market cap has already surpassed those of Visa and MasterCard. Regulators are upbeat, but you still have a good chance of scoring high. So feel free to take a moderately sized position in Bitcoin right before the shuttle leaves the launch pad. But that's going to be all for today's video. Make sure you click on the subscribe and notification buttons.